So Zillow just announced they're not buying houses anymore. Should he be worried? What's up everybody? Welcome back to another vlog. In case you don't already know who I am, my name is Dan and I'm a real estate investor based out of Charlotte, North Carolina. In this video, we are gonna talk about Zillow and how frightening it is that they stopped buying houses. Now, most of you guys already know who Zillow is.
I'm kind of a big deal.
I'm sure that if you're a real estate investor, you've heard people say, hey, well, Zillow says my house is worth X amount of dollars. But did you know that Zillow also buys houses? And they were an iBuying platform and a pretty big player for a long time. They started buying houses in larger metropolitan areas in 2018, and they were making pretty good money. But as of November the 2nd, they have said, we are shutting down the iBuying part of our business and we are gonna lay off 25% of our workforce, which is about 2,000 people right now. You know, starting right now. For me, oh my gosh, this is scary, okay? This is scary. I'll tell you why it's scary. It's scary because Zillow, okay? Zillow, of all people, is not only just a real estate investment company or business. It is a data provider of real estate data. Now, if you don't know this by now, Zillow gathers all the data from all the MLS systems out there and records sales, purchases, how many properties go on the MLS, how many properties fail on the MLS, what do they sell for, how long does it take for them to sell, and so much other data that Zillow gathers about properties. It kind of has a crystal ball in telling Zillow, hey, you know, this is how much this property is worth and how much will these properties appreciate over time. That's a lot of information, especially in real estate. He who holds all the data is king. So the fact that Zillow saw the data and sees the data and they decided, hey, let's cut our losses here and get out of the business. And it kind of scares me because if they have all this data and they're deciding to get out of the business, that means that they see something that me and you can't see. The data is talking to them and the data might be saying, hey, this isn't working out. You guys should get out now. Let's recover our loss and get away from this. Now, you might be thinking, oh, you know, maybe they're just gonna break even. You know, they currently hold $2.8 billion in inventory. Yeah, and that's what you might think, right? But no, they said, let's sell it all and get back what we can. In Houston, Texas, out of all the inventory that they own, 64% is taking a loss. How big of a loss? I don't know. But in the third quarter of this year, they've already reported losses of $340 million.
And it's gone!
That's a lot of money. That means that almost what? Out of the $2.8 billion, almost a quarter of that money is a loss. That's a lot of money to be losing when you are the king of data and you hold basically the crystal ball in predicting what these prices could be in a couple of months. So why not hold on to them and sell it in a few months? Zillow said, no, let's cut our losses.
Zillow Group down 15% this morning, obviously getting out of the iBuying business. $500 million write-down, cutting a quarter of its workforce.
Now, I have my theories on what could be happening with Zillow. Again, they might have seen the data and the data scares the pants off of them. So they decided, hey, let's get out now while we still can before we take bigger losses. Or it could just be, hey, the algorithm sucks. We're losing a lot of money, and to stop losing money, let's just go ahead and cut this now before we further our losses into something bigger. Now that might very well be the scenario that's playing out right now. Zillow might be saying, hey, we're already taking too many losses. We need to cut this now, cut our losses while we can, and just go back to what we were doing previously, which is not buying houses. But the other thing that worries me is, what did the data tell them? Did the data tell them that house buying is currently slowing down? Or did the data tell them that, hey, there could be a correction in the near future? These are questions that we'll probably never get the answer to because Zillow is not gonna disclose any of their information that they have internally unless somebody leaks it. Now, the other thing is that Zillow was trying to monopolize some of these markets. And I'll show you in a short visualization how they were doing that. So basically, Zillow said, hey, we're gonna buy a whole bunch of houses in a neighborhood let's call it a quarter square mile. And we're gonna buy all these houses. As you can see from my illustration, this is not really a good one. But just picture a whole neighborhood being bought up like this. And for each one of those houses, they paid $300,000. So I paid $300,000 for all these houses, but then I decided, you know what? Out of these 7 houses, this 8th one, we're gonna buy it at $340,000. So now, what have you done to the neighborhood? This is an easy answer. You just made the value of that neighborhood go up because you bought a house for $340,000 and you own 6 other houses in the neighborhood that you paid for $300,000. So what does that mean? Now, basically, you sold this house at $340,000. You can now make a $40,000 profit on all those other houses because now you can list those for $340,000. Because everything is based on comps. Comps are comparable home values in the area, which set the tone for what people are paying in the area for certain properties. So for a 3-bedroom, 2-bath property, 1,000 square feet, let's just say that at the time that Zillow bought houses, they were able to buy them at $300,000, sell them for $305,000, just a little bit above market value. The minute that they bought this one for $340,000, now the neighborhood is like, hey, that house sold for $340,000, that means these other houses can sell for $340,000 too. So they're gonna sell all these houses for $340,000, and the house that they bought for $340,000, they're gonna try to sell it for $360,000, recovering some of their losses after real estate fees and yada yada yada. Here's the thing, this right here is a monopoly, okay? You are basically setting the prices for an area because you own so many homes. Now, to some people, this is genius, and I think that's pretty smart too. You know, you bought so many houses in the area, then you bought one a little bit higher, and you basically were the comp for your other houses to make a profit. But is this something sustainable? This is kind of like a Ponzi scheme in a sense. You know, you got to rob Peter to pay Paul. You're trying to stir up new investors by buying houses higher than market value so you can sell your old houses at a greater profit. For me, you're manipulating the market, and nobody ever wins when you do that. It creates an environment where there's not a lot of affordable housing left. You know, most Americans can't afford a $300,000 or $350,000 house, and they definitely can't afford a neighborhood that was once $200,000 and turned into a $400,000 neighborhood. Especially when you see a lot of the companies are either Zillow, Opendoor, or OfferPad, which I'm pretty sure they're all doing the same thing. They're kind of pushing up the values of the properties, and people are paying for them. That's the other problem. People are actually paying for these overpriced properties. Now, since Zillow said that they're closing their doors, we haven't heard a peep from Opendoor, OfferPad, or any other iBuying platform out there. So what does that mean? Okay? What does it mean that they haven't said anything? They haven't done anything. They're continuing to buy. So maybe this is just Zillow saying, you know what, this didn't work out for us, let's get out of here. Or is it Zillow knows something that nobody else knows? We'll never know. But if OfferPad stops buying houses, if Opendoor starts buying houses, this may signal something's coming. We should pay attention to what's happening in the housing market because right now it really is pretty high. When I was younger, I was about 18 years old, I experienced the 2006-2008 housing market bubble, and I can tell you that it wasn't fun. You know, a lot of people were selling their houses, and then all of a sudden the houses that were up for sale went from being valued $300,000, $350,000 down to $100,000, which is a pretty big loss. You're talking about almost what? 65 to 75% loss in value. I was in Florida, just in case you're wondering. So a lot of houses lost value, and they lost value pretty fast. And then nobody was buying, and nobody bought for a long time. You know, the only people that were buying at the bottom were investors like me.
Desperate buyers, record low interest rates, along with low inventory and cash-rich investors are driving prices up. Nationally, 19% higher. But cities like Kingston, New York are up 35%, Boise up 33%, and Las Vegas up 15%. This 1,300 square foot, 1-bathroom home in Tiburon, California went for more than $2 million, 58% over the asking price.
And in seeing the value of these houses increase so quickly, ARV in some of the neighborhoods that we wholesale in are shooting up like 20-30% within a couple of months. it kind of has me worried. You know, where is this market going? Because usually when something goes up really fast like that, that means it's going to come down really fast soon.
Home prices up 10% in the coming year. Peter, what do you say?
Well, today's home prices are completely unsustainable. They were bid up to these artificial heights by a combination of temporarily low adjustable rate mortgage payments, by a complete, absence of any lending standards, and by speculative buying. And what's going to happen in 2007 is a lot of these artificially low ARM payments are going to be reset upward. You're going to start to see both the government and the lenders reimposing lending standards and tightening up on credit, and you're going to see a lot of the speculative buyers turn into sellers. And these sky-high real estate prices are going to come crashing back down to earth.
First of all, I have no idea what Peter Schiff is talking about. I agree with Tom. I think they're going to be up, probably up to about 10%. What artificial lending standard are you talking about?
And it's, you can see it with other things. You can see it in the crypto market. You can see it in the stock market. Anything that flies up real fast, usually it comes down really hard and it stays down for a while, just like the housing market was down for quite a bit. I still remember it being depressed even in 2012, 2013. Really, buying didn't start picking up until about 2017, 2018, and then now you got a bunch of buying going on at this moment in time due to coronavirus and people working from home. So this is definitely something that you should want to pay attention to. Now, should you completely stray away from investing? Absolutely not. I am not a fear monger. I don't like fear mongering, but I will tell you this, just please be careful when investing in real estate. You really do want to know what you're doing. And if you don't know what you're doing, talk to some people who have truly invested in real estate. Not the guys that have lost on their one and only house that they bought and then they'll never invest again. Don't take any advice from those guys. Those guys probably bought it wrong in the first place and now they think that they're experts because they lost money. So what do you guys think about Zillow? Is this something scary? Do you think that we should be worried? Do you think that this is going to affect us in any way? What happens if Opendoor or even OfferPad stop buying houses? What do you think is going to happen to the housing market? Is it going to blow up? How far into the future do you think the housing market is going to turn over? Leave these comments down below, guys. I want to know. I want to know what you guys feel about this. And if it scares you as much as it scares me. So I'm going to go ahead and cut this here, guys. I hope you guys are having a great day. Hope you guys are all winning in your businesses. And I'll catch you guys on the next vlog.